Creamer Media's Mining Weekly Online is talking to Nivaash Singh, the head of Mining Finance International at Nedbank Capital. Nivaash, can you tell us what sort of projects you're involved with now in Africa?
I guess to begin, if I look back at the last 18 months, Nedbank has been very successful in closing approximately $540 million of financings on the continent. What we've pursued on the continent would be some key good copper and gold projects. The one I could mention would be Aureus Mining in Liberia, the new Liberty Gold project, where together with RMB we've put in $100 million of debt financing. Sierra Rutile in Sierra Leone, which is a mineral sands producer, has been producing mineral sands for approximately 37 years. There's an expansion project that we've funded called the Gangama Dry Mining project, which effectively took the company from dredge mining into dry. We, like many other banks in the market, are funders to First Quantum Minerals. We've got $150 million out to First Quantum. And in the last 6 months, I would say, we've been quite active in the diamond space. And thankfully, because diamonds have been really good in terms of keeping its momentum in terms of price, demand and supply. We've put money behind gem diamonds, Letseng in Lesotho, which we consider to be quite a great operation from a profitability perspective and from a recovery of stone perspective. We are also funders to the Gago project in Botswana, which is a $25 million debt package that Nedbank has put in for the development of the underground diamond mine in Botswana. And more recently, Martin, we funded jointly with Scotia Bank out of Canada and Natixis out of Paris, the Mountain Province Diamonds Guacho-Kui diamond project in the Northern Territories of Canada. Mountain Province Diamonds is a 49% shareholder in the JV, with De Beers being the other 51% shareholder, and it's that 49% piece that Nedbank has funded jointly with Natixis and Scotiabank. We consider that to be a great project, but that's an example of where we can use South African expertise, not just on the financing side, but also on the engineering side and the operation side. De Beers built Snap Lake, as you know, in Canada, which was a good story in the end, but using technology that was developed and designed in South Africa, for example, the X-ray technology, found its way into Canada, and Nedbank has been quite active in that space, in the Canadian space. Our mandate in Canada is to lend to projects where there's an African link, okay? And in this case, De Beers was the African link. We remain quite active in the project finance space, particularly from where we've come as a business unit. In the last 10 years, it's what we focused on as a key business initiative for us. But we've expanded that scope from project finance now into corporate lending. So we are now targeting existing producers on the continent from a corporate balance sheet perspective. So we can provide the entire spectrum of financing solutions to mining companies. Project finance for developing companies, as well as corporate balance sheet debt solutions for companies who are already in production, to revolving credit facilities and working capital lines. And that's where we've come in the last 18 months.
And what would you say is the sort of unique selling proposition of Nedbank International as it competes in this space where there are a lot of banks, a lot of activities?
Out the starting blocks, I would say that Nedbank is not a bull market resources bank. We operate throughout the cycle. And it's something we're quite proud of. We built this business on a long-term debt basis. We are here for our clients throughout the turbulence, as you've now seen that's experienced in the market, and we like to approach these projects from a technical perspective. Firstly, we've always adopted the approach that if the technical aspects of the project stack up, we will then be in the position to design a financing solution. And what we found is that that approach has worked well for us on the basis that if a project is not robust enough to withstand downside scenarios from a price point of view, from a delay perspective, from a budgeting perspective, we will not fund those projects. So we will pick those projects that have robust economics, projects that are that come with good, solid management, and putting those two pieces together with our experience in operating in the rest of Africa, I guess you have a win-win formula. We're happy to back the right projects in the right jurisdictions with the right management teams, regardless of where we are in terms of commodity prices.
That was Creamer Media's Mining Weekly Online, talking to Nivaash Singh, Head of Mining Finance International at Nedbank Capital.